Hello, traders. It is Matt and Jacey with Empire Algorithmic Trading here on a beautiful Sunday, end of one week, beginning of another week, and it is time for us to bring you Vwapvision Stock Talk Weekly Review.
It's where we use the volume weighted average price to make sense of this extremely volatile market that is really hard to make sense of. So let's just get to it, shall we, Matt?
Let's talk some stocks.
Stock talk, baby. Well, happy Masters Sunday, Matt. I don't know if you had a chance to watch any of the tournament yesterday, but unlike the market, it was rather fun to watch and it was not exhausting at all. So I am looking forward to a Super Sunday. We got Rory McIlroy and Bryson DeChambeau in the final group. So for a golf fan like myself, could not get any better. And so, yeah, hopefully your weekend's been well. How's the weather up there?
Weather's fine. We're seeing some moderate weather. It's not warm, it's not cold, so it's kind of right in that let's get packed up and get ready to get out of town here for a week. So we're
Right.
very much looking forward to that. It has been a whirlwind of well, I'm sure you're the same when you're leaving town for a while, everything has to be spick and span for
Yeah,
the
yeah,
nothing.
and then
No,
there's always something you forget, right?
yeah.
Oh man, I forgot. I should have grabbed that. I can't believe I forgot that. So, well, it was a heck of a week, man. It was we're not even involved in the market right now, and it was exhausting to watch. You've got we did end up setting a low, which is amazing. We found the S&P found support at the VWAP from the last bear market's low, well, which is a pretty pivotal point to find support at. We have since been building higher lows. But all in all, I mean, you had back-to-back 4.5% declines, which we haven't seen, which has only happened a handful of times. I think 15 times in the entire S&P 500's history. We had the largest one-day rally since October 2008. And then those big, large rallies like that have only happened 6 times since the 20s. All 6 of them proved to be failures. They eventually did flame out because they almost all occurred in bear markets. We have so far avoided the bear market moniker or title, whatever you want to call it, in the S&P 500. I think we only closed, I should say only, we closed like 18.5% or so below the all-time high. So we're right on the cusp. I didn't do any stats or any digging on how many bull market corrections corrected 18% or more before hitting 20, because we know 12%, only 12% have closed more than 17%. So the odds are we're still going to see some further downside action. However, technically, we are seeing some higher lows. We're seeing support at some long-term VWAPs, and we're seeing some stocks kind of showing some strength. So let's just take a look at some charts.
Let's
Review
do
the
it.
whole review the whole gambit here. We're going to start off here, and I know I've got the S&P up. I'm going to change that. This is right now, I think, the most important market in the world. This is the iShares Barclays 7 to 10 year Treasury bond fund. This is what we use as a proxy in TC 2000 is our guide to what interest rates and bonds are doing. Like I've said before, when this fund starts trading below its low VWAP, it tends to spell bad news for equities, and we're starting to see that. I mean, this was one of the sharpest sell-offs as far as interest rates go, one of the sharpest rises in interest rates, I think, in 20, 25 years, something to that effect. That's concerning when you have a wicked sell-off in equities, a wicked sell-off in bonds, and then the weakening dollar. That's telling you capital is exiting the United States, which is not a good thing. Where is it going? That's gold right there. So
Real
that's
quick
old fashioned.
on that bonds, can we talk about numbers on that real quick, where those that VWAP is that we're living below?
Yeah, sure. This is now keep in mind this is an ETF that trades from iShares. So it just kind of this is the VWAP is more considerate for this particular bond fund, but I just used it as a guide because the TC 2000 that we have doesn't provide the volume for the treasuries and such. So when you're looking at the interest rate yields, it just maps out the yield. It doesn't give you any real supply and demand dynamics. This is just simply a way for us to tell, hey, are bonds in demand or are they not? Beyond just looking at the fluctuations of the interest rates. So the VWAP that we're looking at is around 94.50, and the fund itself is around 93.51. Doesn't sound like much for a stock, right? But for a bond ETF, that's a pretty considerable move. Tends to not move all that fast. The average daily range is 0.62%. So it's a relatively, when we're looking at stocks, we're looking at 5% plus on an average daily range. So it's a slow mover, right? So to see this significant of a move in a bond fund is pretty jarring. And you can even go, I mean, we could bring up some other funds, but they're all the same. They all look like this. So what we want to see is stabilization, right? We don't want to see continuation. We would like to see some demand pick these bonds back up. That would be very beneficial. So this is one of the things that we're watching now. It's right now it's not, hey, let's put some risk in. It's just too risky and it's too volatile.
Yeah.
And if you look at the VIX, that's what this chart is. The VIX is at 37.5. What that
Wow.
means is the market over the next 30 days expects a daily range of 2.36% on a daily range. Now that's just for the S&P 500. Good stocks tend to range 2 to 3 times that, right? So that's 5 to 7% on just an average stock. That's too much. If your stop loss is 6%, the average daily range on your stocks are looking at 7 or 8%. We're just going to get stocked out for no particular reason. And how do you stomach that? It's too emotionally draining. It's
Yeah.
too hard to tell what's a real sell-off, what's just normal volatility. So that all those reasons are why we're not only we're in the red zone, we're on the cusp of a bear market. The Nasdaq's in a bear market. The small caps are in a bear market. The mid caps are in a bear market. The S&P is just the last holdout, right? Bonds are crumbling. So overall, it's not screaming risk. So that's why we're not getting into the market right now. However, what we are doing is we are looking for pockets of strength. We're looking for the next
Yeah.
leaders because the market discounts everything. It's looking forward. It's seeing what's going to happen 6, 9 months down the road. Right now, there's no visibility. It's very uncertain, but things are becoming more concrete, right? Trump basically carved out all the electronics out of China. So, okay, so okay, so that's neither here nor there. So it's all possible. It's all moving, right? It's very fluid. This thing can change on a dime, but right now we're seeing some strength. And let me show you what I mean by that. The S&P 500 bottomed out last week on Monday, as a matter of fact. It traded right down to the VWAP from like I said, from the bear market low. That's a very important spot. The other spot that we were looking at is the VWAP from the high of that bear market, and that's at 47.08. We're at 53.60, so we're still 600 points away from that ultimate. This should be the bottom kind of support level. We are finding it down here at the 4,900 level, which is very bullish. Very excited to see that, but it's the early stages, right? So a
Right.
couple of things we want to look for moving forward. We need these lows to hold. That's important. But there's also the Will O'Neill follow through. And he said when you're looking for a bottom, every bottom starts with a confirmation rally. And it starts with one rally, which we got last week, this monster 9% rally here. As
What
long
a
as that low
confirmation rally.
holds, yeah, yeah. Now we need a confirmation rally, all that. And so that's what we look for as well on our buy signals above the VWAP. So a confirmation rally is a rally of 1.5% or more 3 to 7 days after the initial rally
Hmm.
on increasing volume. So even though the S&P was up 1.8% on Friday, it's really only 2 days after that rally, and it was on lower volume than the previous day. So doesn't qualify as a confirmation yet, but that's just an early signal that, hey, we're going to start looking for some stocks to start moving out of basis. So those are a couple of things. Now, what we do is we just wait for the red zone. We wait for the S&P to start living above its all-time VWAP because we've seen over the years that tends to provide resistance. So the confirmation for us is an early step in. You can start taking some risk at that point, keep it small and measured. But as far as our algorithm goes, and the computer program that we're building to actually execute trades manually, we're waiting for the green zone above the VWAP. So some early aggressive, if you want to get aggressive, that's what we're going to look for. If it happens this week, we will definitely point it out. We'll show some stocks that are beginning to break out for Patreon subscribers. So for those of you that are a little bit more aggressive than I may be, or we built the model around, you can certainly take advantage of that market in that case. Just keep in mind, you still have this ultimate overhead resistance that you're going to run into that very well could knock your stocks back down. Having said that, we've got the NASDAQ Composite once again finding support. Again, it looks like it could have made a confirmation rally on Friday. However, lower volume. So we're 4 days into its rally, lower volume, a nice 2% gain. That's a good gain, but the lower volume kind of discredits the whole move there. And then you have the small caps still living below their important VWAPs. And then the mid caps finding some support at a long-term VWAP, but similar pattern to what we're seeing across the S&P, the NASDAQ, basically everything else. The whole market is just kind of in a potential, and I want to stress potential bottoming phase here. So what we're watching now is just for these lows to hold. That's going to be very important. We also want to see the VIX come back down to earth a little bit. Trading as high as 60. That's pretty extreme. I mean, this is the Japanese yen, and it just traded up there. It didn't. Let's zoom in on this a little bit. It didn't even close that high. I think to get a close as high as we got, you got to go back into the pandemic.
Wow.
Yeah, you got to go
Yeah.
back to the pandemic here to get a close as high as what we got just last week. So it's a very significant level of fear. High volatility is expected. Is it going to last? Probably not. We want to see this pull down. We want to see and get back into some reasonable terms. Normally the good markets are around 15 to 17 is where the VIX wants to be. And so, like I said, an average daily range of 2.3% over the next 30 days is pretty darn elevated. And like I
Yeah.
said last week, man, I mean, it's amazing how quickly you adapt. I mean, we were looking at a 3.5% decline, and I was thinking, well, that's not bad, So that just tells you how volatile this thing is. So let's look forward, right? Let's not look back. Let's not, we know where we're at. We're in a
Yeah.
garbage market. We're under pressure. Nobody knows what the heck is going on. So let's start
Yeah.
moving forward. Let's start looking at what stocks are showing some strength. So I brought up Guardant Health for a couple of reasons. One, it tried breaking out a couple of times, and every time it tried breaking out, the market up here on this chart, if you're looking, this blue line up here is the S&P 500. Every time this thing tried to break out, the market, well, here, I marked some green zones and the red zones on here. So every time the market tried to break out, the market either flatlined or took a dump, and it's brought this stock down with it. What I'm excited about is one, you have a very potential strong pattern going here. You've got the stock is trading right around its VWAP. You have declining highs. More importantly, the S&P 500, the general market, is making new lows. This stock did not make a new low. It set a higher low, and it's starting to rally back off of that. So that's a very strong bullish sign. It's telling you this stock is in demand. It's already rallied up 130% off of this. Actually, it's all-time low down here. It's rallied 200%. It's making new higher lows as the rest of the
Wow.
market is selling off. That is a sheer sign of strength right there. So that's one
Wow.
of the stocks on our watch list. That's why we watch these, right? We want to look for the breakouts that were happening in the red zone that just kind of held out a little bit. They fail ultimately, but as long as they hold, they're likely just going to take off. And we're for Arrow Review for our Patreon subscribers, we're gonna have a very specific study of a stock that shows that exact feature. It tried breaking out multiple times in the red zone, broke out the day the market went green zone, and it just went on a tear. So we're gonna be watching these. These are why we keep the algorithm running, why we keep track of what stocks are breaking out during this red zone. So that's why we do this. CrowdStrike, very similar pattern. This
Ooh.
is kind of a different look on CrowdStrike. Looks a little volatile. However, this is a classic double bottom pattern.
Yeah.
You have your sell-off, and it's right at support from its
Wow.
previous important high here. That's telling you there's buyers there, right? So you've got a couple of things going on here. You've got Volume of 7 million on the low, volume of 6.3 million. That's a little bit of a flaw. Don't really like that. So we want to see a little bit of congestion around this VWAP. What I really like is how quickly, even though it sold off hard, within 4 days, it's in relative new high ground. When you look at the volume weighted average price, you draw this VWAP back all the way, there's been no lower price or no higher price than this as far as a VWAP basis. So it's
Mm.
technically trading a new all-time high territory on a relative volume weighted basis as the market is hitting new lows during its correction. That again is a sign of strength. Technically, there are some flaws. This is a little deep. I think we're Oh, actually, that's pretty good. That's only 13%. There was one stock that was about 23% I was looking at.
Mm.
The lower volume here is a concern for sure. Probably going to see some consolidation, but it would not surprise me at all if we saw CrowdStrike be a leader for the next stage. And same thing with Zscaler. I didn't quite bring it up, but Zscaler is the same thing. It's not quite a similar pattern. This one's a little bit more of a long term. This one's just trading, trying to break out of this long term trend, and it's just having a hell of a time getting out of its way. It's tried multiple times, but each time it tries it, the market kind of comes back a little bit and pushes the stock down. So we'll just see what CrowdStrike and some of the cybersecurity stocks, but this is a long-term leading sector of the market that we're going to look for because cybersecurity is going to be fundamental moving forward.
Yeah, absolutely.
Here's Secure U. This is another one that's actually living above its most recent high VWAP, set another higher low as the market was setting a new low, and quickly, within the matter of days, went right back above the VWAPs. So you have a
Right.
long-term all-time high VWAP where it's living above. You have the this potential rally. It was trying to build the right side of a base, got knocked down with some earnings. It's trading above that high as VWAP, and then it's still trading a little bit under that first breakout's VWAP, which proved to be a little bit of resistance when you look back here at the 27, 26 level range at this attempted breakout. But I think that's more a function of the general market trend than as far as that resistance being fundamental. So pure strength out of clear secure U. I like this stock a lot. We'll see what it can do. Same
Yeah.
thing with Robinhood. Robinhood, nice. Now this one had the volume, right? You've got when it set this low here, you've got 88.6 million shares on this day here. Oh darn it! I thought it was had. I misread the chart. I'm sorry. I misread. I thought I was thinking 50 million, 69 million shares on this low. But that's actually not the low. The low had 80 million, 88.6. On this low, you had 80 million. Well, there goes that whole theory. But anyhow, nice double bottom pattern there. It
Yeah.
is kind of like similar to crowd, but as you can see, that strength is within days, it's right back close to its all-time high territory. Wicked volume going on there. Probably going to see some consolidation, but those are the stocks we're looking for.
Now,
Red, yes.
real quick question on that. Do you expect us to see more of the slightly flawed double bottoms because of how the overall market is looking?
Well, it's just I don't. No, I don't really think so. I
Okay.
just think it's just part of the it's just that's just the consistent pattern I'm seeing across the board. A lot of the stocks, again, I misread Hood's chart, but a lot of them have this pattern with the lower volume on the right side. So it's a little bit of a flaw in the pattern, and it's probably going to end up leading to some more consolidation going right side. It's not a pure shakeout.
Hmm.
It's not really what you're looking for, right? So. It just probably means it's just going to have to work through a little bit more sellers because it didn't get that
Okay.
wicked shakeout that we were looking for. So, uh, moving forward, I don't know what to expect, to be honest with you, Matt. I traditionally you would expect this low to hold. It's
Yep.
holding right at a VWAP. You would expect it to move up to the upper VWAP, the all-time high VWAP, and probably sell off, get some more sellers out of the way. Some people that got caught here are probably going to want to get out, especially if there's continued concern and uncertainty. Having said that, if we get a nice V shape and the thing just takes off from here, it very well could be a scenario like we had in the pandemic, where the pandemic was terrifying, right? I mean, that was a ground global changing event. We shut the economy down. Yet the math, the VWAP just played out and it went on for a couple of years. So you just got to trust the signals.
Mhm.
Don't trust your fear, right? Recognize the fear is there. And remember that fear is good in the market because the market likes to climb a wall of worry. Most people just wait. They get the market runs. Those of us that know the signs, we're getting in. As the market goes, people that were too afraid start getting in, and then it starts accelerating, and that's when we're taking our profits. So it's just all market psychology. Fear is the killer, right? From the old Dune series, right? Fear is the mind killer. So fear is the killer when it comes to it kills you when you're trying to sell. It kills you when you're buy. It kills you when you're trying to take a loss, and it kills you when you're trying to take a profit. So it's really hard to get that under control, which is why we develop rules. If you follow your rules, it helps mitigate the fear aspect. You just follow the model, follow the rules, and say, I'm scared as hell right now, but this is what I'm going to do because this is what the rules are telling me to do. You follow that, and it tends to work. Trust me, I've done it a dozen, if not more times, where I've just been like, and the interesting thing is some of the trades that I was like more confident in, like, man, this thing is set up, it's going to roll. And I'm just on top of the world, boom, hit that buy signal. It takes a complete dump. Some of the stocks where I'm like, I don't know, man, I don't know, and you're just kind of holding your breath, and you click that buy, those things just take off, and it's like, man, it's kind of wild how that works, but that's just how it works.
Yeah, yeah. Trust the
Red
system.
Violet. This is a new one. This one popped
Huh.
up on the watch list. Very strong looking stock. Let's see if this one has a good pattern here. We've got 100. Now, the problem with this one is very thinly traded. I think its 21-day average is around 82,000 shares. So it's not a very liquid stock. I just like the pattern, so I wanted to bring it up. 111,000 shares on that one, 111,000 shares on that one. So pretty even volume on that shakeout there. I just like the look of the pattern. It's a relatively new stock. It came public in 2018. It's just holding above. There's no real clear VWAPs there that I could find. There might be finding potential support. It's just a nice, strong looking pattern. So we'll just keep an eye on that. We threw that one on the watch list. 200% earnings per share growth in the most recent quarter. That's a powerhouse move. So for the fact that it just made the screens, tells you fundamentally it's got the numbers and it's got the momentum to it too. So we'll keep an eye on that one. Carvana. Let's see if this one has the volume we're looking for. You've got 5.7 million, 6.9. There we go. Carvana's showing a little bit of strength. A little bit of a sloppy pattern, not as pretty as Red Violet or Hood. However, wicked support right at these VWAPs. This is a strong gap here. This was a strong earnings gap, and the stock just went on a run, a massive. Let's see. It ended up peaking out 314% higher after this run. It did flash some sell signals in between there, but ultimately topped out 314% higher. Found support right at that VWAP, right when the market's hitting lows. And within 5 days, it's already back in its all-time high VWAP territory. So very strong pattern there. And as far as the story goes, it makes sense for Carvana to be showing some strength. I was actually surprised. It flashed a potential buy signal back here for us during the red zone. And I was thinking during Arrow Review that this could very well be a anti-tariff bear market stock here because new vehicles are just going to get more expensive, and these guys have a market in used vehicles. So it just kind of makes sense story-wise. Of course, technically, the market just killed it, just sold it all off. Everything was getting sold off, I should say. But then it found the strength, and it just rallied right back up. So that's a very bullish pattern right there. Would not surprise me at all if the market continues to move higher to see a buy signal come from Carvana. Same thing with Rubric. I like this one. Same thing here. Let's see if it's got the volume. 2.3 million, 3.5 million. Now that's the volume we want to look for. A nice big shakeout, higher volume. It closed up. Even though it broke below, it never really closed below that low. So that's a pretty solid traditional shakeout. Rallies up nice and strong. Currently living below its all-time high VWAP, clear double bottom pattern, and it finds support right at its all-time IPO VWAP. This is a
Huh.
new company, went public in April of 2024. Love these kind of newer issues. These are the
Yeah.
ones that we want to watch. These are the stocks that are going to go absolutely bonkers when this market goes crazy. 86% earnings per share growth in the most recent quarter. It's only an $11 billion market cap, so it's still relatively small as far as market cap goes. So there's a lot of potential money that could come right into this. So this is what excites me. This is the kind of stocks that we want to look for. When I'm looking through charts, just to see what's happening, what's going on out there. That's why I brought this up. So we're starting to see some of these patterns starting to form. Some of them are a little flawed, like we saw. Some of them are really good. And so it's kind of exciting. Brinker International, another one that just kind of showed up on the watch list. I'm a little surprised that it didn't, but look at this run, man. This thing flashed a breakout right down here, and it didn't fly. Let's zoom in on this a little bit. Flashed a breakout right here, and it did not flash a sell signal. Yeah, it kind of almost pulled a Meta. I mean, it rallied up 38% without a single hitch, right?
Wow.
Then it does it again. This one is kind of crazy. It goes and goes, still doesn't flash a sell
Wow.
signal. There's possibly a sell signal. Then it just keeps, there's the sell signal there.
Wow.
So this one went from this buy to that sell signal 127%. So that's a pretty nice run, forming a nice downward sloping consolidation here. We do have some higher lows, so a potential, what I like to call that snout pattern. A little
Mhm.
steep for that, might have a little bit of work to do. This will probably, if it does show some strength, will probably turn into a cup and handle, more of a sideways looking pattern. But of course, if the market takes off and this is a true leader, this thing will just take off with it as well. So just want to bring that up just because it's showing some strength, and I just like the look of that pattern. And talk about strength. Nutex Health, health information services company, has gone from 7 to 132 during, let's see, was it 7 August of last year? Now it's at 132. The crazy part is it's just getting to its all-time high VWAP. So there are institutions and mutual funds that aren't even paying attention to this stock yet. So there's a whole universe of funds that are going to start be looking at this. This is the kind of absolute bonkerness that a lot of people look for shorts, right? They're going to be looking for what's called a parabolic short. The stock goes absolutely nuts, and most likely it's going to revert to the mean and come right back down. I haven't studied that trade a whole lot. I've been focusing more on the long side. So there's a couple of ways to look at it. It's probably going to sell off when it gets around this VWAP here. But this is one of the stocks that we just added to the watch list simply
Yep.
because of the pure strength that it's shown. 262% earnings per share growth in the most recent quarter, and it's just starting to come across its all-time VWAP. So
Wow.
uh, you might look at it and go, "There's no way this stock can go any higher." And yes, it can if it's a true leader. Health information services, not exactly sure what the hell they do, but if it's a true leader, this thing is just starting. So
Right.
it's pretty wild to see that there. And then Argan, I wanted to show this one because it's showing some serious strength as well. It sold off hard with the market. The market sold off really hard, hit a new low for the correction. Argan found support at its VWAP and continued to race higher. 6 sessions later, 5 sessions later, it's trading in all-time high VWAP territory. So on a real absolute basis, its all-time high is at 187. On a relative volume weighted average price basis, it's trading at all-time highs as the market is still trying to find a bottom. That is pure strength right there. And then lastly, I do want to bring up Exodus movement. This one is showing some pretty serious strength. It rallied up, had a really parabolic run, sold off hard. This is kind of what you would expect to see from Nutex, but rallied up, sold off hard, kind of found a little bit of a support here, and then it's just tightening up, and it's kind of living right within range of its VWAP here. So we're watching this one. Would not surprise me at all if this was a potential new leader. I love newer companies like this. It went IPO last December, so it's really new. 530 earnings per share growth in the most recent quarter. So
Wow.
those are the kind of stocks, software stock. I don't know what they do. I just look at earnings growth. and chart patterns. I've learned the lesson the hard way that uh, when you learn too much about what the company does, it kind of works against you because then you don't really trust what you're seeing in the market. You're saying, "Oh, this is a long term. This thing is going to be making," and then the stock just goes against you, and next thing you know, your small loss turns into a big loss. So, and then you're just hoping it comes back. And so I learned my lesson the hard way to just don't get too deep into what the company does. Learn the story, kind of find out where it makes sense in the market. Focus on the earnings growth, and then after that pay very close attention to the technicals, pay very close attention to the price because price never lies. So just follow the market and you'll be just fine. So we're just going to keep a very close eye on this. The beautiful part is we don't have to look at any charts. We don't have to bother paying attention. Every day, before we built this algorithm, I'm looking at hundreds of stocks. We've got 100
Right.
and I think about 155 stocks on this week's watch list. Every day looking, boom, boom, boom. Which ones are setting up? Which ones are making the moves? The algorithm takes care of all that for us. Now it's just a simple
Boom.
email. Boom. Here's the 2 or 3 stocks out of 6,000 on the market that fit this very, very, very tight criteria. I mean, you got to keep in mind, I mean, the price performance is likely in the top 10% of the stock market. So there goes 74 or those 6,000 stocks right there, right? The earnings per share growth is either 25% or it's in the top 10%. Same thing with revenue growth. It's either in the top 10% of the market or 25% revenue growth. So just from that factor alone, we're in the cream of the crop right there, just on a fundamental basis. As we know, fundamentals drive stock prices. So you combine our technical analysis of the stock needs to be in all-time high territory on a volume-weighted basis. Then you're talking a stock in an all-time high territory that has strong fundamental earnings growth. That is the recipe for success.
Yep.
All we need now is just the market to go along. All we need is things to settle, things to start moving, and for the market to bottom out and move forward. And we're gonna make we're gonna make some significant hay because those
Yeah.
first the corrections and bear markets, they're what creates the new leaders. The old leaders are going to sell off. There's going to be about half, if even that many, are going to end up recovering, right? The market's going to move higher. Your Nvidia, your Meta, your Apple, those are the market right now, right? They're going to move higher with the market, but they're not really going to outpace the market. We want the new stocks. We want the Cisco from 1990, right? We want the
Right.
Microsoft from 1993. We want the Dell computer from 1994. We want Nvidia. We want SMCI from last year, Supermicro went absolutely bonkers. Astera Labs, ARM Holdings, the list goes on and on and on. Those were all leaders in the last bull market, and there nobody heard of them, right? We're going to hear nobody heard of Dell Computer until Dell became Dell, but the market knew of Dell. Nobody really trusted Amazon. Amazon blasted out of an IPO base, and it went on a wicked tear. So, and then Amazon became Amazon, right? So that's what we're looking for. It's a very exciting time. I feel real bad for anybody, particularly anybody who's close to retirement, to have to experience because now it's like, okay, now I have to start selling these assets that I've saved my whole life for. Yeah, 10 years ago, I could have recovered from this no problem. But right now, I need to start pulling money out. That reduces their exposure to recover any of these losses. So the simple fact that this was caused uh, by a single person's instincts is just a tragedy. I mean, it really is. And I was reading this and I read that quote and I was thinking, how do we prevent ourselves from ever ending up in this situation again, where a single person can just say, it's my gut instinct that I'm going to put these on and then I'm going to take them off. And I'm just doing it all by how it feels. And if I'm thinking that, then there's institutions thinking that, and there's governments thinking that, and so there's going to be a whole lot of shuffling. The idea that the United States, and it's just a shame because we had a really good position as the safe haven. Whenever things went south, they rushed, and that they just lit that up on. I mean, I hope the damage isn't done, but it might be too little, too late at this point. They just took a match to that and lit that all on fire. So there's going to be long-term repercussions for that. Having said that, we're still going to rock, man. This market's still going to kick ass. We're still going to see some growth. Are we going to maintain a 23 multiple? Maybe not, but hell, I mean, the 80s we had a 15, 18 multiple. The 90s we had a 19 multiple, and there were wicked stocks. I mean, back in the 60s there were unbelievable stocks going up 500, 600, 700%. And so, we didn't have the large capital inflows going in like we do now. It was a completely different game, but the market was still the market and stocks still went on wicked runs. So it's just a matter of time and it will turn around. And when it does, we'll be ready.
And at the end of the day, I bet on the American businessman. That's what I do. The amount of American ingenuity and people that are willing to take their company on their back and make it work. I have so much faith and confidence in that.
Absolutely. And so, yeah, I'm not bearish in the long run. I'm actually pretty bullish, to be honest with you. So it's just really just disconcerting about everything that's going on. But
Yep.
in the meantime, just let the market do what the market's going to do. It'll bottom out, and then we will get a new run, and we'll be ready. So,
And like
all
we
right,
said,
man.
not being in it, we just kind of get to sit back with the popcorn and watch the show.
And even that's exhausting. It's like, oh my gosh, I was so happy to take Friday night off. I watched a little Black Mirror, which was the new season's pretty fun. I highly recommend it. But yeah, it was tiring, but I love this stuff. So
Yep.
of course, by yesterday afternoon, I was sitting down looking at charts and studying and seeing what had worked in the past and what setups looked right, what setups failed, and how do we know the good from the bad moving forward. So that's just the way it is. That's the way I am, and that's what we do here. So thank you for watching, everybody, and happy Masters Sunday.
Happy Masters Sunday, everybody. Thank you for watching on YouTube, listening on Spotify. Make sure that you're following, liking, sharing everything that we're doing here. Also, find us on socials: Facebook, Instagram, X, Blue Sky. Find our website, Vwapvision.com, for more information on who we are, the algorithmic model that we built based off of everything that Jacey's been talking about today. Again, that's VWAPvision.com. And if you'd like access to our algorithmic daily buy and sell signals, make sure to subscribe over on our Patreon, patreon.com/ Empire Algorithmic Trading. And you can also get some access to some educational videos. We're building a pretty cool little community where we can interact with everybody, ask some questions if you have, or just brag about your mega winners. Like, we love to see that kind of stuff too. Again, patreon.com/ Empire Algorithmic Trading. And until this week, where you guys get big doses of Jacey, happy trading, everybody.
Oh yeah, I forgot about that. Well, have a safe trip, Matt. Enjoy it. No, I'm kidding. I didn't forget about it. Have a good trip, Matt. Again, I am going to be out tomorrow, so there will be no stock talk tomorrow. But I'll be back on Tuesday, and I'm just going to throw charts up, and we'll just take a look and see what's going on. So it should be fun. And I like how you said brag about your wins, right? And your big monster wins. I almost take as much pride talking about the good stops that I
Yeah.
had. The thing just kept going because that almost is worth bragging. So any good stops you have out there, don't forget to share those too because that shows a real good next step in progression of your trades because it's very hard to admit you were wrong and it's very hard to sell a stock for a loss, especially if you just bought the damn thing. So, yeah,
Yep.
yeah. Not
Mega
only brag
wins
about
and
your wins, brag about your small losses too.
the avoided losses. Look, this lost 43%. I only lost 4.
Yeah, that's right. That's right. It was actually and just real quick, I know we're wrapping it down, but I was looking at it, and it really is the market is the fundamentals come into play, the technicals come into play. The stock could be set up beautifully and look great, but if the general market is not in the right position, if there's not the right mood, it's gonna fail. It's ultimately
Yeah.
gonna fail. And I was looking for good arrows and bad arrows, good arrows and bad arrows. And the bad arrow column is super large and the good arrow column is small. But I went backwards, right? And I'm looking at the most recent breakouts over the past 2 or 3 months. And that's why the bad arrows are so bad. When you go back, it's the complete opposite. So when we're in a good market, going to be completely different scenarios than what we're seeing right now. Like I said before, it's going to be what stock's going to go up the most, not what stock's going to fail next. So it's a completely different mental experience. It's a different emotional experience, and it's a different experience on the account too. So, like I said, it's just I'm excited for that. I can't wait for it to happen because we've got the model, we've got the knowledge, and we have the skills to help you guys make some serious money in this market when it does turn around. And having said that, happy trading, everybody.
Happy trading, Jace. Have a great week.
All right, see you later. Bye.